Hey guys, how we doing? Hope we're good. Hope we're great. Um, let's if you're just joining and you've always been keeping up with the sessions, I would appreciate if you can probably share the live to those who you think could hop on with us, and then let's get started together. It's Monday, and this is the 8th of December, so we're looking at the forex factory. So remember, I actually did this the last time, so I'll have to turn up everything back, and we just have just this 4, 1, 2, 3, 4, 5. So we're not really concerned about the rest, just this. Okay, it's a bit up now. So first thing I want to talk about, I'm trying to get a summary from this on how the Fed rate decision this week, jolts job data, how it's going to impact the DXY, the gold, the Bitcoin, as well as GBP CAD, basically through retail psychology. The crowds typically reacts to these things. So the retail reaction, basically, people know that when rates are cut, we have weak dollar. When there's a bad labor data, we have weak dollar. When the Fed are dovish, what happens? We've got a weak dollar as well. Three things, right? These are the three expectations. So we know or we expect that the Fed should cut rates or signal cuts. I also expect that the jolts should also come out weak. So what happens is that is going to impact the dollar in terms of sales, right? Retail is going to sell. So, but if for any reason the Fed becomes unexpectedly hawkish, there's going to be a lot of panic among retail traders, and there'll be so much FOMO into buying the USD. So the DXY is going to spike up very well, right? So, and the DXY becomes literally very jumpy because retail overreacts to central bank guidance, which often amplifies whatever direction the first candle actually gets to show. So if we look at Monday is literally free. So we've got nothing today, but from tomorrow, Tuesday, the 9th, we've got jolts coming up, job openings coming up. And if you want to get some, this we've got September data, and we can see September is coming up. Remember, I say that the last set of data that has been pending should all be released like this week, most likely. So we've got September data here, and then we've got this coming for October as well. So we've got September, October coming out together. So whatever next data that needs to come out from like upper week now, we're looking at November, December data, but we've got in September, October coming out together. So it's going to be very, very interesting. And if you can see here, there's literally a forecast of people looking at 7.4 in, and 7.14 as well. So people are looking at job openings dropping. So it's more just validates the, I think it strengthens the point, right, of what I have been saying, basically what I've been talking about and forecasting over the past from the 1st of December about the dollar being. So this is like the fundamental aspect of what we did on the technical side, right? About the dollar being bearish, and I expect it to sell for about 1 to 2 months. And so the perception of what you're seeing as regards because whenever you see what you call like forecast here, this forecast are actually very important because it's not just retail forecast per se, it's collated, right? It's aggregated across several banks, and analysts from banks, hedge funds, and different people put together. They try to find an aggregate. So some people could be predicting, let's say for Jolt's job openings, some people could be predicting 7.2, some 7.3, some 7.1, some 7.0. So they kind of find like an aggregate of every prediction and find the closest possible points that aligns with almost the majority, right? That's basically how this, when you see forecast on forex factory, investing.com, that's how they get to those numbers. So you have that understanding and don't just ignore it entirely, right? Because sometimes even when you get like a big beat or a big miss, it's you see how the market reacts very well. So it literally just shows you public sentiments if you understand it as easy as it is. So we've got so basically if rates cuts, gold should go up. If there's a weak USD, gold should go up. If there's uncertainty, we should have a gold safe haven, right? So gold is usually basically rally when retail sees weakness in the USD or there's fear in the market. And so fundamentally, gold is still bullish, right? So, but though we get to see when people start dumping gold when there is um quick downside move, more like when the Fed they are staying firm and they're becoming hawkish. So that when you say hawkish, hawkish means increasing rates, dovish means they're cutting rates. So when they start becoming hawkish, that it gives that signal that okay, this is what could happen. So we've got Bitcoin, right? How does this impact Bitcoin for this week as we are in as well? If because if you look at coming, look at Wednesday. Wednesday we've got the President Lagarde, which is the president of the European Central Bank. She's speaking on Wednesday morning. It impacts everything concerning euros. Her speeches is as powerful to the Europe economy, because she's the president of the European Central Bank. So everything that has to do with euro will be impacted heavily by her speech. Just the same way, everything that has to do with the dollar is impacted when um, the Fed chairman, was his name again? When he speaks, Powell, right? Powell speaks. And then on Wednesday, we've got like employment costs coming up. But I feel like this employment cost is going to be past data too. It's coming from, yes, it's the past data. It's past data, not like even recent data. The CAD, we've got the Bank of Canada, their rate statement is going to be coming out, overnight rates as well. So in terms of what rates, if Canada going to cut rates or not, the expectation is there. So if it's actually is greater than forecast, it's going to be good. If it's not, it's just going to be, it is what it is. And then we've got a Bank of Canada press conference by 3:30. So it's going to be very intense, right? And we've got the rates, obviously, FOMC rates by the evening of that day. So Wednesday is going to be so volatile, really, really volatile for Canadian pairs, the dollar pairs as well. Thursday, we've got employment change, which is the odd and unemployment rates for the Australian. Australia is one of the most stable economies in the world, just like Canada. I don't know in both of them. I don't know which of them is more stable, but Australia and Canada have some of the most stable economies in the world. In the world, Australia and Canada actually. So it's going to be interesting to see what works with them. And then we've got you can even see like you see that being reflected even on the strength of the pairs if you're trading, right? And we've got Thursday, we've got the Bank of England, Governor Bailey is going to be speaking on the Bank of England. And we've got unemployment claims, which should be the same thing as NFPSL for Thursday. And on Friday, we've got the GDP for GBP. So GDP of the UK. Okay. So that means basically we've got an interesting dry day today, and then we've got a lot of activities happening Tuesday, Wednesday, Thursday. So we're still like in a lot of volatile, crazy week and all that. So in terms of Bitcoin, right? So basically people knowing that they're going to cut rates means there's going to be more liquidity. If they're going to cut rates, there's going to be more liquidity. If the dollar is going down, risk asset goes up. What happens? The bull, right? So people aggressively buy Bitcoin when they see the dollar being weakened, Fed cutting rate. It's like a green light for a lot of people, right? Except the Fed start becoming hawkish. But other than that, net effect is basically usually bullish on BTC. We've got like data. When the data weakens USD and increases liquidity expectations, right? This aligns more with a bullish stance. More with a bullish stance. As pertain the pound and the Canadian dollar, GBP card as a pair itself, right, is usually driven by primarily by oil sentiment and the Bank of England versus Fed expectations. So this is something that most times, sometimes I think especially those who are in the, what's it called now, those who are in the bank. I'm trying to get the exact word. Okay, let me. For those who've been, let's say, people who are in the forex trading network, they've seen some times where I'd be like, okay, this is the implication of what is happening between both economies, and this could impact the trade, right? So if it's going to be a weak trade, I could say that, okay, could what is going to happen. And sometimes if we're going to hit a loss on that trade, you just see it plays out that we've taken a loss on that trade despite that we took the trade. And beforehand, if we take a loss on that trade, those who in the forex trading network already know based on what I explained. So this is how you know, basically being able to read, to understand economy effects, what drives an asset class. This is why most times advanced traders who are very, very good expert, you see them, they don't trade so many pairs because they get used to a pair. They understand the economies behind that pair. They don't try jumping from one pair to another pair to another pair. There are people who've been able to master the art of doing a lot of pairs, and people who've been able to master the art are people who've been able to master, like, let's say, a strategy or a pattern that they use, and I try to see the pattern on so many pairs as well. But even at that, they have specific pairs where they have the greatest probability of making money, and you see them, they double down more on that pair than any other pair. That's where they risk the most amount of money. That's where they make a large chunk of their trading money out of, right? And if you don't have that understanding, you could just literally be left by the side, right? So in terms of GBP card, oil sentiments as per Canadian affects Canada as well a lot, and the Bank of England versus Fed expectation, all this affects both, right? So this is how retail think. If the USD weakens, the GBP is strong, the pound is strong, right? So it's bullish for GBP card. The fact that the DXY is going to be bearish means GBP card is a bullish thing for GBP card. You can put that aside, right? But now, if oil rises, right, it means the Canadian dollar, it strengthens the Canadian dollar and becomes bearish for GBP card. If oil falls, it weakens the Canadian dollar, it becomes bullish for GBP card. So you see here, let me try to look for something that could be a little bit practical. Let me share this tab, and then let's do something now. Let me make a duplicate of the screen, and then let's look for okay. I literally can't even recall what's the ticker for oil again. Is it crude? Okay. There are so many tickers here. So this is not set in stone, but it just gives you some level of insight that this is like. So you can see here, one of the ways you could just literally get. So you see here, and let me click on the 8 hours chart for here. You can see here when the GBP card was like going really, really up, really, really down. Sorry, the oil was like skyrocketing, right? Skyrocketing. Look at every major swing whereby GBP card bounced heavily. You can see that the oil is very, very, very bearish as well. So you get to see on the, so like I don't trade oil. I don't like trading it. But if you are good in analyzing oil, you could literally be good in knowing how to like navigate the, what's it called now, GBP card and stuff. So let's assume that we've got something like this, an oil. So if we're using this, I could also just draw this too. So we've got 1, 2, 3, 4, 5, 6. So let's assume we see oil wants to, I don't know. This is just basic drawing, right? It's not like any serious form of analysis and stuff. I don't really. There are people who are good in literally analyzing oil, right? I don't think I'm one of them. I basically look at, when it comes to oil, I just look at the fundamentals and I make my decision based on that. And it helps me more, like it gives me more level of accuracy. I don't really believe that oil is, but there are people who are able to use technical analysis and trade oil, that which is also a great thing. But I think oil is literally very heavily impacted by the fundamentals. So I think if you can align fundamentals with it, it's gonna good. So most times if I have a fundamental bias be as regards oil based on what I'm looking at the data, I just look at support and resistance levels and either buy or sell. That's how I literally trade oil. So I don't really like have one specific strategy I get to use for oil. But we can just see in practical terms what I'm saying. Thank you guys. I just opened it now. Thank you. I can see our comments. So you can just see what I'm saying. When oil, so if overall, right, later in the week, we're looking at the USD being bearish. So that should strengthen the pound, and that should be bullish for GBP card. And then we've got a lot of news coming this week, so it could be crazy. So, but when oil falls, the Canadian dollar is weak. It's bullish for GBP card, right? So the Fed news is going to impact USD, which indirectly impacts the pound. So if USD weakens post-Fed, retail assumes pound is going to benefit and often buys pound very well. And then this puts the GPU card up. The only time we get to see when it begins to range is when oil surges, right? If oil begins to move up, then you see it begins to range. So, but if the Fed is hawkish, so the US is going to be strong, pound is going to be weak, and people sell GBP card adds more momentum to the downside. So GBP card likely lifts if the USD drops, and if oil is neutral or falling. So if oil is ranging, right? If oil is ranging, like it's neither going up, it's ranging, or it's going down, then that is bullish for GBP card. Hope so in summary, I'm trying to summarize this so we get that understanding in terms of when the Fed is dovish, there's a lot when there's rate cuts, when there's weak jolts, which is the job that are coming tomorrow, all that means liquidity is entering the market into risk on assets. It means the dollar is going to be bearish, gold is going to go up, Bitcoin is going to go up, GBP card will go up if oil is stable. There's an if there, if oil is stable, right? But if not, it's going to go down, right? You're going to be stopped out. Then for the hawkish Fed is more like when they say they're going to increase rates, right? And there's no cut. If the Fed is hawkish and there's no cut, what happens? Risk off. People are gonna USD is gonna be the safe haven. USD dollar is gonna buy, GXY is gonna buy, gold is gonna go down, Bitcoin is gonna go down, GBP card as well is gonna definitely go down. So if the Fed gives any hint of easing or slowing down tightening, people are going to go crazy risk on. BTC is going to rally, often maybe even faster and more aggressive than gold, depends, right? So the cruising narrative is all around this, and I think that gives you some level of insight into what could possibly be or play out in the market. Let me quickly go to comments and reply some of the comments. Solomon Osike says, "Good afternoon, Shifu. Greetings. How are you doing, Solomon? Hope you're good. How are you doing? Are you at work? Are you home? Hope you're great. Calmness Solutions, how are you doing? Hope you're great. How's work going? We're in December already. Hope you're preparing for the Christmas. Pinnacle says thanks for the alpha. What's good, Pinnacle? What's good? So now we've done looking at the fundamental aspect of things. Okay, this is about the WTI. Thank you, AJ. Thank you, Pinnacle. Now we're done with that. Let's look into what could let's look at, like, let's say three opportunities that could play out today, right? And could or could not be an opportunity. So it's today's Mondays, and Mondays is usually like literally crazy, right? So there's what is called medium probability and high probability. High probability is when you're certain that okay, this could just go, this should just happen. Medium probability is when you're not too sure, you're just in between as well. So literally every trade here today are all falling under medium probability, right? There's no setting of high level of assurance of whatnot as well. So it's just like GBP card now. I've got an entry, yeah, which is here. Let me click on this. I've got an entry around here. That's if price comes down a bit into here, and this is my stop for this. So this could be like a very sweet entry, but entering here on CMP2 is just an entry, so it's up to you. So basically I split. What I do most times is I get to split my entries, what I'm risking. So let's say if I'm risking $5,000 on a trade, I could split it between both entries. Depends on what works. If I'm risking 10K, if I'm risking 1K, 500, whatever, split it as well. So we've been on this sell. This was a 3RR trade, and this sell will close in profit. So if it gives us, fine. If it doesn't, but I think a lot of today, like we see, today is very dry. So I feel like the market is going to range a lot today, and it may not really have that kind of momentum we want to see. But if we get that any momentum, that is going to be really good, really really good, like really really good. So that is there, and then we've got the dollar. So I'm literally expecting a deep pullback on the dollar, right? I expect a deep pullback on the dollar. So if you understand harmonic patterns, right, or trade harmonic patterns, we're getting what we call a dip crab, right? A dip crab is it a dip crab? Yeah, I think it should be a dip crab. So this is how a dip crab looks like, and that is basically what I'm expecting, right? A dip crab looks like this. This is the X leg, the A, and then this is the B. It's usually around 0.382 retracement of the fib, and then the C is usually the 886 retracement of the A and B, and then price moves a bit higher above here. It could be anywhere, it could be here, it could be here, but price clears this level. So usually a deep crab plays out when the X is actually what we call true liquidity or divergence liquidity that needs to be taken care of, right, at some point in market. So that's basically what I'm expecting there. I'm looking forward to this. I think if I'm going to ever have a training, like a very intense training on teaching people in trading again, I may have to come up with a curriculum that is going to involve harmonics and how to blend it with what you're doing and stuff as well. But remember, this has been like we've got a major point on a longer time frame, but looking at this is still like set in stone. Yeah, so if we get this pullback up here, this could set it. So this pullback, most times we get pullbacks when there's no data, right? When there's no data in the week, we could literally see pullbacks. When there's no in the day, like today, right? Activity is definitely going to begin in the New York session. And now, in like 2 hours time, we're getting the New York session, and when the New York session begins, that's when I expect some level of activity in the market. So if that happens, right, that could like align with a lot of thesis and what we're looking out for, and it still doesn't mean like what we're expecting should still play out. So maybe that's gonna make what's it called now, the card come down or up, I don't know. Whatever I wants to do is gonna do. And then we've got EU. There's something very funny on EU, so I have to look for it. And where do I look again? So I gave GB card as number one. We're looking EU, Euro USD. I'm looking for my general chart. Okay, this is the chart I want to use. So this is EU chart, right? Initially, if you look at this chart, the first two entries looks very, very sweet. To be honest, they look very, very sweet. But when you begin to look a little bit intensely into it, I've got something like this coming. I've got also a very, very similar pattern plane here, which is this. And if I'm to do this now, bring here, what this means, is if for any reason, right, price gets here and buys up a bit, there's a tendency that we may also still get stopped out. Because if you look here, just this zone here, we've got a very, very funny zone here. And when I mean a very funny zone is we've got something that looks more like we've got something that looks more like a double bottom, right? A double bottom, right? We've got something like a double bottom or a triple bottom, whatever. So it could literally be cleared, right? It could literally be cleared, and this could literally get stopped out. So if I want to say, so basically what I want to look out for is to sell, right? Entering a sell from here, whatever stop work that works for a person. So then I may, let me hide this, right? Because I don't. So if I'm selling, I'll literally be selling to my stop loss, right? Selling into the zone. If I'm selling from now, it's going to be like a 2-hour trade, a sell. And then where would I like to buy? Actually, I'm looking at buying here is the best bet for me. Buying here is the best bet for me, because if you look at it on the 8 hours, that's how it looks like on the 8 hours. It looks like a very interesting version of head and shoulders forming in. It also looks like I think the most key thing here is this, right? See where the white line is, price clearly, and then we've got this, what do you call it again, FVG imbalance, whatever. So it's coming to fill there. It's like it makes a lot of sense, right? So if I decide to stretch it down to there, that's going to be like a 2.5. But I'm not like trade like this whereby it seems like I'm not getting a very good, so much RR. I just do 2 RR and I'm out, right? And then here, from here, I could be looking at buying. So if we get this, when you look at buying here, and I think maybe if we get this buy, like let's say sometime tomorrow or next tomorrow, it's going to be a sweet buy, because we're going to buy for a very long time. We could buy it like to as high as here. Remember, our major targets for the next month or two is here, but what we're doing is you're trading level to level, right? Because there's a sell pressure from here currently. I used to have, I think I removed the sell, because I had a sell markup for here, right, with a stop loss of here. So if you look at that sell markup and factor in a 2 arrow for the sell markup, let's say this is a stop loss, right? So if I factor the first sell I had, which I didn't take, right, but if I took it, a 2 arrow will still be the stop loss of this previous buy, right? So it's unsafe for me to just jump in on the sell here. So if price, so this is what could happen for those who are like advanced traders. So this is what could happen. We could see something like this. I am looking for. You could see something like this, something like this. We could. So we just have to keep an eye on and watch out to see what happens when it happens and all that put together. And meanwhile, for crypto, let's take a look at. So we look at two pairs already in terms of forex. The crypto, there was a pair we were looking at before. Don't know if it's this one. Okay, this guy. And we're saying that when if getting a proper breakout here is definitely what is going to be sweet for this. Like it's what going to be good. So if you haven't gotten, because we see this is like an inverse head and shoulders that's yet to break. That breakout is definitely what is going to be key for it to get yet to get that. And the other one we got in has been ranging as well. So if we put all that aside, we have to look for. Okay, let me look for something. Let me look for something. Looking for something else. Okay. This. So you could use this. You could use this. I have this running already, right? But like I said, most times in my trades entries, I split entries, right? So you could use this from CMP or wherever you want to enter. That's up to you. But that's my stop is there. And then I've got this as well, just in case it gets invalidated, right? I've got this lower entry, but I'm expecting this for this. This is almost the same thing, right? The first one I'm looking at an 8RR, this I'm looking at an 8RR as well. So either ways and both ways, if you get in, let me say if someone is getting in from this point, the person's RR is definitely going to be smaller, but it's still going to be, I think, above 6RR and all that put together. And it's more of a swing, right? So it's something that if you factor in and then most like 1, 2RR, you could decide to get out if you want to get out as well. So I think I have that is Solana. So I think that should cover for today. And then tomorrow we're gonna look at we're gonna check in. Okay, did this guys perform? How well did they do? What state are they in? And then we'll look out for new opportunities tomorrow too as well. Like I said, we shouldn't go more than 3 on a single day. More than 3 on a single day. That's not going to be good. Not going to be good. So much has been said so far for this week. And okay, let's take a look at Trump. So 9 a.m. already passed, and then President is going to be participating in a round table today as well. So maybe we may get some activities, news, some stuff coming up. And I mean, the New York session, the whole of December is intense. That is why you see, I just trade the New York session. Really, I don't. I just trade the New York session. New York session is best in trading. Most times, you could see a market moving in a particular direction, Asia, London, and then it picks the right direction during New York. If you just stick to New York session, you could make a lot of money this month. Okay, guys, bye for now, and. I think this is the longest I'm having our daily live stream so far. It's usually like 10, 15, 20 minutes and done. Bye for now. See you guys tomorrow, and then we're gonna review what was shared today, how well did that do, or how bad did that do, and then we're gonna look at 3 more for each day, and we keep on doing that Tuesday, Wednesday, Thursday, Friday, and let's see how much money we're gonna make at the end of this week. 2 forex trades, 1 crypto trade. That balance the equation. Bye for now and have an amazing week, guys. Okay, I didn't reply, Jeff. Jeff, I can see your GM. Hi, hope you're good. Hope you're good. Hope you're great as well. Pinnacle says, please, can you give us analysis on ETH? Okay, just because you asked, I was about rushing up already, but I think I've got a trade on ETH actually. So this was actually, so I've got two trades on ETH, two positions, right? One is a limit, one is already running. So this is for both of them. So this was my entry for ETH. It looked like a 5.5 arrow on this. And let me click on it so you can see the pointers could pop up for you. But I'm like, okay, if this shit doesn't work unless it decides to go down and stop, then there's another one I have here by the corner. One of these two should play out. It's either this plays out or this. This is a 15 arrow actually. So one of these two is gonna play out because there's no reason on earth why I see it should get, because see this zone which we got on ETH was okay. I haven't shared it. Sorry, I just shared it now. It wasn't sharing. I can see. I'm coming, guys. I got distracted by something, so I'm just looking at the thing. I got distracted by something, so I'm coming. Coming. Okay. Okay, so if you can see here, this was the entry I gave was around April. March, April. I said if Ethereum comes here, it will never come below here again. And I gave us that entry around March, April this year. And this was a level that's marked for 2 years earlier. So I showed this when I marked this somewhere around 2023 and waited for 2 years just for this entry, and it produced an all-time high on it. So when I factored that, okay, this guy is actually pulling back, right? If it's pulling back, I expect it to either pull back here. So this was actually the entry I had in mind. I have this particular entry here, the 2318 in mind, right? Technically that is what mine. But when I looked at it, I saw something forming here. We call this what's it called again? I call this the 3-drive pattern in harmonics, the 3-drive pattern in harmonics. And sometimes the 3-drive pattern happens when the price is what we call has had a deep retracement and is about to pull back aggressively, like make a new should I say new high or breakout, something like that. So if you get it, and this was a 3-dive pattern. So when I saw it forming here on this demand zone, because this is also a key level, a major high key level, which I marked that once this breaks, it's gone. It's not been retested since, right? So this is a retest of this key level, and I saw this. I'm like, okay, this is the closest opportunity to jump in on this, so I don't miss out because I'm waiting for this. So if it decides to now fail and come back, it's fine. No, I just splitted my entries, splitted my risk, so I don't have a problem with it. What happens, but overall, this is what I'm looking out for it. as well. I think I got in. Is this Saturday I got in on this, or I'll be Sunday, whatever. So that's that for it. I think that should answer your question. That should answer your question. And bye for now, everyone, and have an amazing, amazing time, an amazing day.